That was mainly driven by few of the stocks, wherein in the Dow, the Johnson and Johnson has reported good number and went up substantially. And whereas in Nasdaq, Netflix and Tesla came off very sharply. So these two different reactions happened, and that's why the index are moving in different directions. Overall, the impact movement in the indices is mainly driven by the result rather than uh, the other things. Uh, Even in India, also we will see some larger reaction because of the Infosys, where the ADR is down by around 8%. And also HUL has reported some weaker marginally below numbers. On the other hand, United Spirit has reported comparatively better numbers. So in all, the index will be more driven by the result in today's trade. Uh, Apart from that, if you see the Asian market, we are seeing again the mixed reactions. Japan, Hong Kong, and China are positive, whereas the other markets are negative. Even in commodity, also we are not getting any clear directions. Whereas the dollar index yesterday has moved up. Commodity oil has also moved up by around $0.5. Iron ore is down by 0.5%, and steel is up by around 1%. So in all, we are getting some mixed movement in international market and also expected in the Indian market. So market will be driven by the stocks and may see some negative reaction because of that. I'll request technical team to take up from here.
Yes, thank you. So, good morning, all of you. This is Swati. Today, the market is likely to open with some gap down opening, and we might witness some profit booking session at the higher level. Yesterday, Nifty has quoted a new high at around 19,991, almost 8 to 9 points away from the 20K. We believe that profit booking cannot be denied after such a rally within a span of 2 to 3 days once Nifty manages to give a breakout of 19,600 levels. Now going ahead, 19,800 will act as a crucial support level. If it's break that level on the closing basis, then this profit booking session is likely to be continued into the Nifty, which might take a Nifty towards 19,600 to 19,500 levels. So the view is becoming little bit cautious at the higher level. So we request the clients to book the profits or place the trailing stop losses and carry your long positions. But for today intraday purpose, the first support is placed at 19,900. Any move below that level, 19,840, 19,700 levels can be seen. Whereas on higher side, as of now, 20,000, 20,040 is the crucial resistance level. Above that level, we are likely to witness some positive move towards 20,140 to 20,170 levels. Now coming towards the bank nifty, for today intraday purpose, the support is placed at 45,800 and 45,500 levels. Whereas on higher side, the resistance is placed at 46,400 and 46,740 levels. So the view is becoming cautious on the bank 50 also. So we request to book the profits at the higher levels. Coming towards the Fin Nifty, 20,670, 20,760 are the crucial resistance levels. Whereas on the downside, the support is placed at 20,410 and 20,240. One more request I would like to make. The Nirmal Bang host, I request you to please mute your mic because it's creating a disturbance in our conference call. Thank you. I hand over to the derivative team to take a call forward.
Yeah, this host team, please mute your. Please mute. Please mute. Host team.
Yeah, Abhishek. Abhishek, please mute your line.
Continue here.
Yeah, okay, sir. Yeah, hi. Thanks, Swati. This is Neerav here. On the derivative front, looking at the overall standing, there was a good day yesterday. We almost reached 20,000, but 20,000 level is a resistance area. A lot of call built up is seen around the 20,000 strike. So, also open interest has shot up quite aggressively yesterday from 1.1 crore or to 1.4 crores in about 2 or 3 days. So it's a huge rise. PCR is around the higher levels, and VIX is also around the 12 levels, even though Nifty moved up. So yeah, a little bit the data is negative. Also, one thing to note is the cost of carry or the premium discount that we say Nifty is in a discount. So generally, whenever such things happen, there is a reversal, and you see some selling coming in up to the support level. So the support levels are around the 19,500 odd levels. So that is where some sort of base building had happened. So yeah, that is the support area, and we might just witness some selling up to those areas. So from the stock specific front, banking continues to do well. Abhishek, just mute it. Yeah, thanks. So, yeah, banking did well. Federal Bank, ICICI Bank, as I said, did quite well. Federal had a lot of shorts, and we are seeing short covering action, which is a good sign, and it can perform quite well. Another few stocks like Indus Towers, Sun TV, these stocks were under short creation from the last 2 years, and we are seeing a lot of short covering action there. So there is a chance where these stocks can move up. So look out for the same. They can give very good returns going forward. IT sector will remain under some selling. As I said, IT, if you want to buy IT, there is a base building formation, but they've moved up quite significantly, and they can come down towards their support areas, and which is where you buy again. So some selling will come in there. Yeah. So that's it from my side. I'd like to ask the fundamental team to take over, please.
Good morning. So on the result side, 361 Wealth Management, which is IIFL Wealth, result has improved. Revenue grew 9% sequentially. If we break down the revenue, recurring revenue, which is distribution plus AMC, that revenue grew 15% sequentially, while the broking revenue declined by 27%. And the recurring revenue AUM also grew by 9% sequentially. ROE has been inching up. It is at 23% now. Stock is trading at 21 times FY25 EPS. So we are bullish on the company. CSB Bank result has declined due to heavy OPEX. On a sequential basis, loan book grew by just 2%, NII grew 4%, while OPEX grew by 11%, leading to decline in profit before provisioning by 10%. Cost to income was much higher at 63% versus usual run rate of 56-57%, which led to a decline in ROA from previous 2 quarters of 2.3% to current quarter 1.8%. Asset quality remained very good with slippage ratio at just 0.6%. And although in the near term there is nothing much, but from long term perspective, we are bullish on CSB Bank. South Indian Bank result was weak, led by decline in net interest margin and increase in credit cost. Advances grew 14% year on year and 3% sequentially. Net interest margin saw a big decline from 3.7% to 3.3%. This is one of the largest declines that we have seen in this quarter, resulting in sequential decline in net interest income. Since 2 quarters, credit cost was very low and unsustainable, and this quarter it has come at a more realistic level of 1.1%, resulting in ROA settling at 0.7% versus the previous 2 quarters ROA of more than 1%. We think this is the realistic kind of number for ROA. Many investors thought that last couple of quarters ROA of more than 1% was sustainable, but that was not the case, and that is why we saw the stock correcting also yesterday. So although the stock remains cheap, as such, from the numbers point of view, there is no trigger in the near term. Slippage ratio also was at 5-quarter high at 2.7%. We are neutral in the near term. Union Bank of India result is above expectation on the back of stronger NIM and lower credit cost. NIMs are surprisingly expanded by 15 basis points to 3.13%. Credit cost was at just 1% against expectation of 1.5%, which resulted in ROA touching the 1% mark after many years. The stock is trading at 0.9 price to book. We think there is some scope for re-rating over here. ICICI Securities, the result is marginally above expectation. On a sequential basis, revenue grew 5%, while in case of Angel, it has declined by 2%. EBITDA and profits for ICICI grew by 4% sequentially, while in case of Angel, they had declined because of negative operating leverage. So result seems to be decent, uh, and we have seen very robust market in the June quarter. That is one of the reasons that performance of cash market heavy companies like ICICI Securities was good. So we are positive in the near term, but from long term point of view, we think flat fee brokers like Angel and 5paisa would do better. There is one IPO opening, Utkarsh Small Finance Bank. Sorry, it will be listing today. We had already given subscribe rating. Price per share was 25. Listing is expected to happen at around 40 rupees. The total issue size is 500 crore, fully fresh issue. The business model is very similar to that of other small finance banks like Ujjivan and Suryodaya, where 66% of the loan book is from microfinance, and remaining 33% is from a mix of housing, LAP, SME, auto, and other corporate loans. Loan book stands at 13,000 crores with growth of around 30% last year, and we think this kind of growth is sustainable. Major geographies for this bank is Bihar and UP. More than 50% of loan book comes from these two states. At a macro level, performance of these states has been superior to all India average. Uh, in FY23, the bank posted ROA of 2.4%, ROE of 22%, which is encouraging. And we see these ratio further improve in the current year. Over FY21 to 23, Utkarsh SFB has outperformed its peers on almost all parameters, and is available at was available at discount at 25 rupees. It was trading at just 1.1 times FY23 book value. So even at once it lists at 40, I would suggest that people who have got shares who have been allotted, they can hold on. And below 40, it can even be a case of accumulation where stock has further scope for re-rating even 40. So that's it from my side. Thank you.
Good morning. Infosys has posted numbers yesterday, and the company has posted inline set of numbers for the quarter. With TCP came in at 2285 million, and revenue growth in CC terms QOQ came at 1%. EBIT margin came muted at 20.6%. However, the company has got downgraded the revenue guidance for FY24 to 1 to 3.5% versus 4 to 7% guided earlier. This is majorly due to slow decision making, ramp downs, and lower volume. Operating margin guidance is kept intact at 20 to 22%. Outlook is near term negative. Coforge has posted marginally below expectation set of numbers for the quarter, with CCQOQ revenue growth coming in at 2.7%. EBITDA margin came muted at 13.8%. The company has maintained its FY24 revenue guidance to be in the range of 13 to 16% in CC terms. Gross margin to improve by 50 bips year on year, and adjusted EBITDA margin to be similar like FY23 at 18.3%. Outlook is long-term positive. Zensa Technologies has posted above expectation set of numbers for the quarter, majorly on the margin front. Dollar revenue came at 149 million, and EBITDA margin came in at 18.8% versus expectation of 14.8%. This includes 100 bips of one-time impact. Adjusting to it, EBITDA margin came in at 17.7%. Management indicates near-term demand environment remains challenging, and in and wage hike impact will come in Q2. On margin front, they endeavor to be at mid-teen margin and invest back for further growth. Outlook is long-term positive. Emphasis has posted below expectation set of numbers for the quarter, with dollar revenue coming in at 398 million versus expectation of 407 million. EBITDA margin came in muted at 18% versus QOQ of 17.8%. Stock is trading at a PE of 24.3 times FY24 EPS. India Mart posted above expectation number set of uh, for the quarter, both on the revenue and the margin front. The company has approved buyback at a price of rupees 4,000 crore, 4,000 at a price of rupees 4,000. Buyback size is rupees 500 crore. Current market price is 2,899. This is positive to the company. Thank you.
Yeah, good morning. The Almia Bharat reported result and result was below expectation. Sales volume stood at 7 million versus expectation of 7.2 million. Realization per ton was in line with expectation at 5,177. However, uh, due to rise in input costs, EBITDA per ton came in below expectation at 871. Margins were also below expectation at 16.8%.
Avish, your voice is not clear.
Hello,
Yeah, your voice is very low.
is it better now?
Just speak bit loudly. Avi.
Yeah. Uh, so yeah, EBITDA per ton stood at 871 versus expectation of 915, mainly due to higher input costs as compared to last quarter. The margins were also below expectation at 17% versus expectation of 17.7%. The company has its con call today, where further details are updated. Apart from this, Heidelberg Cement had its con call yesterday, wherein the management has indicated cement volume to grow at 7.7 to 8% in FY24. The cement prices are likely to be under pressure on account of rising competition coming from JK Cement, the Almia Bharat, and Adani Cement in the central region. Cement realizations are down by rupees 50 to 60 per ton in July as compared to June. And if we look at company's record, the company has lost its market share in the last few years, and with new capacity coming in from other companies, the company may continue to lose market share. So the outlook is for Heidelberg Cement. Thank you.
Good morning. Tata Coffee Limited, yesterday there was a con call. As discussed yesterday, Vietnam and India operations has delivered the good performance. This was largely because of instant coffee consumption has seen the continued growth. Also, Europe has also observed rise in consumption despite challenges. However, there was a weak performance in 8 o'clock business. This was largely due to the lowered prices for Arabica, and there was impact of lower volumes and higher input costs. So there was a challenges for spray dried coffee due to lower consumer demand, where the South Asian market and some parts of Africa are the large buyers of spray dried coffee. The company guided for the capex of rupees 45 to 47 crore for FY24, and it expects these are the big projects, and these will be finalized in discussion with the Tata Consumer Management. The merger process with the Tata Consumer Product Limited is at advanced stages, where the final order is expected during the quarter. Also, ongoing Brazil harvest is a key thing to monitor in the near term. The stock is trading at 17.8 times true TTM EPS, and the outlook is neutral. Hindustan Unilever Limited posted results yesterday, and the results were below expectations The volume reported at 3% versus the expectation of 5.3%. The revenue reported at 15,148 crore versus the expectation of 15,446 crore. So also Rohit Java, he has replaced Mr. Sanjeev Mehta, who retired from the CEO and Managing Director of HUL. Prior to this, Rohit Java was in the transformation, chief of transformation for Unilever in London, and he addressed yesterday's con call. So more than 75% of business is winning market share and gaining penetration. And he briefed about the volume growth in different categories, where the home care as well as beauty and personal care categories has saw the mid-single digit volume growth. And it was the food and refreshment portfolio who has dragged the overall volumes, where it has seen the near flat volume growth as consumers, it has observed that consumers are downgraded from premium tea to loose tea. On terms of the volume growth outlook, the management expects gradual recovery in volumes with flat or negative price growth during the year if the commodity prices sustain at same level. Also, the innovation and category creation is at the core for the business growth. Also, the rural market volume growth has improved sequentially, and it expects to grow further. However, the weather related risk and El Nino impact on inflation and rural demand is a key thing to be monitored. In terms of competition, it is finding resurgence in small regional players because there is a moderation in inflation. So it is witnessing increased competition. And in terms of the advertising and promotion expenses, the management will continue to focus on improving gross margins in order to invest in the A&P expenses. The gross margin during the quarter has improved 140 basis points QOQ, and the A&P expenses higher by 110 basis points QOQ. The stock is trading at a 55.2 times to FY24 EPS, and our outlook is positive over the long term. Thank you.
Yeah, another company that is United Spirit has reported good set of numbers. Last quarter also they reported better number, and we had seen the stock moving up from there. And today also they had reported good numbers. The volume-based growth continued to be maintained. It came in at 10% for peelings, prestige and above category, which was there in the last quarter as well. So that too on a higher base of last year. And EBITDA margin came higher mainly because of lower ad spend, whereas the gross margin has seen some moderations in this quarter. So overall result seems above expectations. And I'll request commodity team to take up from here.
Thank you, sir. This side Utkarsh here. In US, for today's trading session in USD INR, one can initiate a short positions in the range of 82.04 to 82.109 levels. The strict stop loss of 82.18. If prices are going to sustain above 82.18 levels, you can see further upside till 82.25 levels. And for the intraday target was 81.95 and 81.80 levels. In Euro INR, if prices are sustaining above, if prices get some pullback around 91.60 levels, so one can initiate a short positions with a stop loss of 91.95 for the target of 91.45 and 91.20 levels. Thank you.